Good morning to all. Today I am going to discuss about income tax law and practice presented by Dr. P. Vellingiri, Associate Professor and Head of the Department, Commerce with Computer Application. Tax we are going to pay the tax to the government, backbone of the economy, as well as the individual is going to pay the tax, and the money, the why we are utilizing the money for defense and social welfare activities as well as healthcare and education. The tax has classified into two categories. One is for direct tax, another one is for indirect tax. These items are coming under direct tax, the income tax, corporate tax and the capital tax, as well as the indirect tax also include in the goods and service tax, customs duty, stamp duty, like this. And the tax slabs rates introduced by the government in every year. In this year, in this academic year, that means the assessment year, the 25-26, the new regime and old regime followed by the government. The first one is for the old tax regime, the oldest one, up to 2.5 lakh, so no need to pay any tax to the government, it may be nil. And 2,50,000, up to 5 lakh, 5% of the slab rate, up to 10 lakh, 20%, and above 10 lakh, we have to pay 30% of the tax to the government. And new tax regime also followed by the government. Then for 4 lakhs, up to 4 lakhs nil, 4 lakh, 8, up to 8 lakh, 5%, up to 12 lakh 10%, 16 lakh 15%, 20 lakh 20%, 24 lakh 25%, above 24 lakh, if your earnings increased more than 24 lakhs, you have to pay 30% tax to the government. And so we are paying the tax to the government based on the previous year. How we are going to calculate the tax based on the previous year? So what is the meaning of the previous year? The previous year is April 1 to March 31st in the last year. It means 1/4/2024 to 31st/3/2025 as the previous year. Suppose the person income earned in this year, we are going to calculate the tax. At the same time, the assessment year, the current year is assessment year. So how we are going to calculate the tax in the assessment year? The period of 1/4/25 to 31st/3/26 is a assessment year. So in this period, we are calculating the tax by the individual. How we are calculating? Based on the previous year income earnings, we are calculating in this year. The 12 months period of 1 April to 31st March in every year. So here the heads of income tax are there. Here we are going to calculate, classify into 5 categories. First one is for the income from salary. As an individual earning the income, the employer is giving the salary or provide the facilities to the employee. Employee is getting the salary from the employer. So that is the salary income. It is the calculated for bonus, commission and pension, etc. And income from house property, the person living in a house as a tenant, maybe rented house, we are paying the tax to the government. We are collecting the house property, that means the rent from the tenant, and we are going to pay the tax to the government. That is house property income. And third one is profits and gains of business or profession. The business income, suppose you are running any business or any firm, you have to pay the tax to the government based on your income. And also the profession. In India, the doctor, engineer, lawyer and chartered accountant, they are as a professional people. Suppose their earnings, they are going to pay the tax to the government in the end of the year. And after that, the capital gain. Capital gain classified into 2 categories. One is for the long-term capital gain, another one is for the short-term capital gain. Suppose you are selling any property or land or assets or any shares, so you are coming under the capital gain part. And the last one is income from other sources. So out of 4 points, so apart from this, the income from other sources, it is different category. So it will not include in the 4 categories. One is for the bank interest, dividend, suppose winning from lottery, any gambling. So you are receiving the money from the gift. So these amounts are coming under the income from other sources. So these are all the 5 heads of income. Out of 5, we are going to, first topic is the salary income. We are going to see that. First one is for the salary. How we are going to calculate the salary income? Salary plus allowances plus perquisites plus profit in lieu of salary. So these are all the income in the name of this, another name of the salary. So the deductions also there. So we will see one by one. So the first one is the components of the salary. Already I mentioned that the money received from by an employee from the employer. The employer is paying the salary to the employee. Employee is receiving the money. So these things are important. First one is for the basic salary. It is a fixed pay. Basic pay, or maybe the pay it is getting from the employer. And allowances, HRA, DA, that means house rent allowance, dearness allowance, traveling, medical. So these kind of allowances also we received from the employer. And perquisites. So we are not paying the money, we are providing the additional benefits. So company car, accommodation and insurance, they are provided by the employer to the employee. These are all coming under the perquisites. It is then bonus and incentives. Based on your performance, the company provide the bonus, maybe 1 month salary or 2 month salary. So these things are the components of the salary income. And the allowances. So allowances, 3 categories. First one is for the fully taxable allowance. So these are all the items are coming under the fully taxable allowance. First one is for the dearness allowance, dearness pay. It may be the enter into the service benefit, enter into the retirement benefits. While preparing the salary income, it will be calculated. And the city compensatory allowance, suppose the person living in the high cost of living, so the company provide the city compensatory allowance. And overtime, extra time we are taking for, suppose the person, employee working in extra time more than 8 hours, we will pay the overtime allowance. Even the medical allowance, we are provide the facilities to the employee. And the project or warden or servant allowance also paid by the employer. So this one is for the partially taxable allowance. The previous one is fully taxable allowance. This one is partially taxable allowance. How we are taking the partially taxable allowance means the first important thing, house rent allowance. The house rent allowance, these categories may be the permitted. First one is actual HRA received, rent paid minus 10% of the basic salary, and 50% of the salary and 40% of the salary. Suppose the employee living in the metropolitan cities, we will pay 50% of the salary. The person living in non-metro, the metropolitan cities like Chennai, Calcutta, Mumbai, Delhi, and other than metropolitan cities, we are paying the 40% of the salary. The whichever is less, exempted up to the lowest of the 4 things. And then leave travel allowance and children's education allowance, hostel expenditure. So based on the category, suppose the children's education allowance exemption provided by the employee, the tax norms, 100 rupees per month may be exempted. Remaining will pay for the tax. The exemption up to 300 for the hostel allowance, even the single child, maximum 2 child allowed. This one is for the fully exempted allowance. No need to pay any tax to the government. One is for the uniform allowance. The company provide the uniform for all the employees. It may be exempted for that. And the academic research allowance. Suppose you are receiving any grant or research, it may be exempted. And the foreign allowance. The person working in abroad as an Indian employee working in abroad, so no need to pay any tax. It also exempted. And the allowances for judges. So specifically the High Court judges and Supreme Court judges, maybe the allowances are also exempted. So deductions from the salary. Suppose you received the salary, after that the deductions also there. So what are all the deductions? Employee Provident Fund, that means EPF, the 12% of the basic salary calculated. And deduction for the TDS. Suppose your earnings, maybe it's coming under the TDS. After the TDS, then we can get the money. It will be returned by this Indian government. The professional tax. Suppose you are in the local body, you are working in a particular place, you will pay the professional tax. And the employee state insurance. Nowadays it is provided by the company for medical facilities. So employee state insurance also allotted for all the employees. And standard deduction. So this is fixed by the government. 75,000 for the new regime, 50,000 for the old regime. So your earnings may be in 1 lakh means the 50 may be deducted by the Indian government, and other potential deductions also there for some kind of expenses. And how we are going to calculate gross salary and net salary? The gross salary is a basic salary plus allowances plus bonus plus perquisites. So these are all the calculated in the name of gross salary. After that, we are going to find out the net salary. Very simple, gross salary minus deductions. Already we explained how we are calculating the deductions. So based on that, the net salary calculated. And so this is the basic and example of the salary structure. Basic salary 30,000. The employee is getting 30,000 salary as a basic. After that, HRA, that means house rent allowance 15,000. And allowances, some other allowances may be permitted as a 5,000. The bonus also provided 5,000. The gross salary 55,000. So this is the procedure. We are preparing the salary structure. This person is getting the salary, so basic pay 2 and bonus. So this is the gross salary. The person is getting 55,000 as a gross salary. What is the net salary? Based on the percentage, we are calculating 5,000 as a deduction, and the net salary is a 50,000. So this is the salary structure. I have given one example for how to calculate the HRA, the house rent allowance. House rent allowance, already I explained the procedure. 50% of the metropolitan cities, 40% of the non-metropolitan cities, and rent paid minus 10%, HRA received. So based on this, we are going to calculate what is the exact HRA. Here in this problem, the calculate taxable HRA from the following. HRA received 1,000 per month. The employee is getting 1,000 rupees per month from the employer. And rent paid rupees 1,500. Actually, the employee received only 1,000 rupees, but he is going to pay the tax in the paying the rent every month 1,500 rupees. The 500 may be increased. Salary is getting 10,000. Each and every month, the employee is getting the salary 10,000 rupees. The DA also provided by the company 500 per month. So this is the problem. So we are going to give the solution for the above problem. So how we are going to calculate the exempted HRA? Exempted we are going to calculate. First one is for HRA received 1,000 into 12. So here he is getting 1,000 rupees per month. 1,000 into 12, total amount 12,000. And rent paid minus 10% of the salary. Rent paid here, the given clearly they are giving 1,500 per month. So 1,500 into 12, total amount 1,20,000 into 10% of the salary. So 10% of salary 6,000. And third one is, he is not living in the metropolitan cities. How we are going to identify the person is living in the metropolitan cities or non-metro? So here they are not mentioning the person living in the Chennai, Mumbai, Calcutta, Delhi. So clear, we should know the person is living in the non-metro. Easily identify the person living in the non-metro. For that we are taking 40% of the salary. And then 40% means 48,000. Here we are going to calculate exempted HRA 6,000. So before preparing this exemption 6,000, we are calculating this one. How to calculate the salary? How to calculate the basic salary? Basic pay plus DA plus commission and turnover. Here the basic pay 1,000 per month, and there is no DA, there is no commission. So plus nil, total amount 12,000. So we are taking as a 12,000. So exempted HRA 12,000 minus 6,000. So what is the formula for calculating HRA? Taxable HRA means HRA received minus exempted HRA. Taxable HRA received 12,000, exempted 6,000. So we are easily calculated 6,000. So this is the structure of the salary income. Thank you.